Hello and welcome everyone to my channel Banking Digits. My name is Shoikat Maji. In today's exciting video, we dive into the world of letter of credit, explore the importance, functions, and how it ensures smooth global transactions. In this video, we are going to discuss about what is letter of credit, types of letter of credit, the letter of credit process, UCP 600 and standardization in a letter of credit, various documents required in the LC, benefits of using letter of credit, and future trends and digitization. First, let's know the definition of letter of credit. As written here, a letter of credit is an irrevocable undertaking issued by a bank whereby it undertakes to make payment to the beneficiary provided that the documents stipulated in the letter of credit are presented and all of its terms and conditions are complied with. In simple terms, a letter of credit is a financial instrument commonly used in international trade transactions to provide a secure and reliable method of payment between buyer or importer and the seller or exporter. It serves as a guarantee from a bank to the seller that the buyer's payment will be received on time and for the correct amount as long as the seller fulfill the terms and conditions specified in the LC. It means LC issuing bank issues the undertaking in form of letter of credit. And what is the undertaking? Undertaking is that issuing bank will pay to beneficiary against presentation of documents if all terms and conditions of LCs are fulfilled. Just remember the important point here that LC is opened at the request of applicant, but undertaking is between issuing bank and the beneficiary. If complied documents are presented, then issuing bank has to pay even if applicant does not pay. Now, let's look at the various types of letter of credit used in international trade. Each type serves specific purpose and offers various level of security and flexibility to parties involved in international trade transactions. It is essential to choose the appropriate type based on the trade terms, parties relationships, and the desired level of risk mitigation. Here, I have explained some of the common types of letter of credit. First is irrevocable letter of credit. This is the most common type of LC. It cannot be modified or cancelled without the consent of all parties involved. What are the parties? Buyer, seller, and banks. It provides a high level of security to the seller. Next is revocable letter of credit. Unlike an irrevocable LC, a revocable LC can be modified or cancelled by the issuing bank without prior notice to the beneficiary or seller. This type of LC is rarely used due to the risk it poses to the seller. Please note that UCP 600 does not permit issuance of revocable LC. So, a revocable LC cannot be opened under guidelines of UCP 600. Next is confirmed letter of credit. In a confirmed LC, a second bank, usually the advising bank or another correspondent bank, adds its confirmation to the LC, guaranteeing payment to the seller. This is often used when the seller is dealing with an unfamiliar or politically unstable buyer. So, what happens here when beneficiary does not trust the issuing bank because of many reasons like credit risk, country risk, political risk, etc., then beneficiary adds confirmation in the LC through a bank which is situated in the country of beneficiary by paying an extra commission. And on the due date, confirming bank pays to the beneficiary even if issuing bank fails to pay. Next is unconfirmed letter of credit. An unconfirmed LC only carries the guarantee of issuing bank. It may not provide the same level of security as a confirmed LC, but it is less costly for buyer. Now, next type of LC is side letter of credit. In a side LC, the payment is made to the seller immediately upon presentation of compliant documents. The buyer's obligation to pay arises as soon as the required documents are presented and verified. Just remember here, applicant collects the document from issuing bank only after making the payment to the beneficiary. Usance letter of credit. This type of LC involves a deferred payment where the payment is made at a specified future date after the presentation of the documents. It allows the buyer more time to make arrangements for payment. Here, applicant collects the document from issuing bank after submitting unconditional acceptance to the issuing bank stating that they will pay on the due date. Due date means after a certain period of time. Now, next is rate clause LC. This LC includes a clause that allows the issuing bank or confirming bank to make partial or full payments to the seller before the presentation of shipping documents. It provides pre-shipment financing to the seller. It basically facilitates making advance payment to the beneficiary before shipment of the goods. Next is transferable letter of credit. This LC allows the beneficiary or seller to transfer all or part of the LC amount to one or more secondary beneficiaries. It is commonly used when intermediaries are involved in the trade. This is being used when a trader or a middleman is involved in an international trade transaction. The original beneficiary or the first beneficiary of the LC has the ability to transfer all or portion of the or a certain portion of the credit to one or more second beneficiary. Here, trader is the original beneficiary of the LC and the second beneficiary is the actual manufacturer from where the trader buys the good. Next is back to back letter of credit. In this arrangement, two separate LCs are used. One issued by the buyer's bank in favor of an intermediary and the other issued by the intermediary's bank in favor of the ultimate seller. This arrangement is also quite similar to the transferable LC. In transferable LC, single LC is used which is further transferred to the second beneficiary in part or full. But in case of back-to-back LC, two separate LCs are opened. One is in favor of the intermediary which is opened by the supplier or manufacturer, and another one is in favor of the ultimate seller which is opened by the trader or middleman. Now let's understand different parties involved in a letter of credit. First is applicant or buyer. The party that initiates the LC and applies to their bank, which is called as issuing bank, for its issuance. The applicant is typically the buyer or importer. Next is beneficiary or seller. The party in whose favor the LC is issued. The beneficiary is usually the seller or exporter who will receive payment upon fulfilling the terms and conditions of the LC. Next is issuing bank. The bank that issues the LC on behalf of applicant or buyer. The issuing bank's role includes examining the LC application, ensuring compliance with terms and authorizing payment to the beneficiary upon receipt of compliant documents. Next is advising bank. This is the bank in the beneficiary's countries that advises the beneficiary about the issuance of the LC. The advising bank may also provide assistance to the beneficiary in preparing documents and ensuring compliance. Next is confirming bank. In a confirmed LC, this bank adds its guarantee to the LC, assuring payment to the beneficiary. The confirming bank's involvement enhances the beneficiary's payment security, especially when dealing with an unfamiliar issuing bank or country. We have already discussed about what is confirmation earlier. Now, nominated bank. If a specific bank is nominated in the LC for negotiation or payment, it becomes the nominated bank. This can be the advising bank, confirming bank, or any other bank agreed upon in the LC terms. In the LC, you will generally find this under available with field. Please remember here, if any specific bank name is mentioned under available with field, then it is called a restricted LC. Then only that particular bank can act as a nominated bank. However, you may also see that sometimes under this field it is mentioned as any bank under this available with field. In that case, any bank can act as a nominated bank. Next is negotiating bank. The bank that examines the presented documents and determines whether they conform to the LC terms. If the documents are compliant, the negotiating bank prepays to the beneficiary on or before the due date. This payment is separate from the payment of issuing bank. Negotiating bank makes payment to the beneficiary before getting payment from the issuing bank and further presents the document to the issuing bank for receiving payment. Now let's understand the structure of a basic letter of credit transaction. Just look at the diagram here. A trade transaction will normally begin with the establishment of a purchase or sale contract or pro forma invoice between a buyer and seller. The contract or pro forma invoice will indicate the method of payment, nature of goods, the amount, the names of the buyer and seller, and all other terms of the contract. Now, with this contract, applicant approaches his bank to open the LC as per the terms and conditions mentioned in the contract. Then issuing bank opens the LC and sends the LC to advising bank, which is situated in the country of beneficiary, for further advising to the beneficiary. After getting the LC, advising bank advises the LC to the beneficiary of the LC. Now, after getting the LC, what beneficiary does? Beneficiary prepares the document as per the terms and conditions of the LC and dispatches the goods to the applicant. Simultaneously, beneficiary presents the documents to the nominated bank or advising bank which is mentioned in the LC. Then, advising bank further presents the documents to issuing bank. After the documents reaches to the counter of issuing bank, if issuing bank find documents are credit compliant, then issuing bank makes payment or provide acceptance to make payment to beneficiary through nominated bank. After this, applicant collects the document as soon as issuing bank is able to collect the fund from the applicant's account. At last, applicant releases the goods from shipping line by submitting those original documents. Now, look at the governing rules and its benefits under letter of credit. In general, most of the LCs are opened under UCP 600 or UCP latest version. However, it can also be issued under ISP 98 or any other local or international rules. Here we will discuss about UCP 600 only. The Uniform Customs and Practice for Documentary Credits, which is called UCP, is a set of internationally recognized rules and guidance developed by the International Chamber of Commerce to govern the use of letter of credits in international trade. UCP provides a standardized framework that helps to ensure consistent and fair practices in LC transactions. UCP rules are currently in their sixth version, known as UCP 600, which came into effect on July 1st, 2007. UCP 600 establishes clear and standardized terms, definitions, and interpretations for various aspects of LC transactions. This reduces misunderstandings and disputes between parties. UCP rules are recognized and accepted by banks, traders, and legal professionals worldwide. This global acceptance ensures that LC transactions can be conducted with a common understanding of the rules regardless of parties and locations. Now, I will quickly tell you about the common documents generally you will see under LC presentation. Commercial invoice, a detailed invoice issued by the beneficiary or seller that specifies the description, quantity, price, and total value of the goods shipped. It provides a breakdown of cost of the goods and any additional charges. Bill of lading, a transport document issued by the courier or shipping company that confirms the receipt of goods and outlines the terms of shipment. It serves as evidence of goods shipment and acts as a title of documents. Packing list, a document detailing the contents of each package or container, including the type, quantity, and dimension of the goods. It helps with the customs clearance and ensures that the goods match with the description on the invoice. Certificate of origin, a document issued by the relevant authority or Chamber of Commerce that certifies the origin of goods. It indicates the country where goods were produced, manufactured, or processed. Next is insurance certificate or policy. It is proof of insurance coverage for the goods during transit. It provides protection against loss or damage to the goods while in transit. Other transportation documents. Additional documents such as an airway bill for air shipments or road transport document for road shipment may be required based on the mode of transport used. Phytosanitary certificate required for shipment of agricultural products. This certificate verifies that the goods meet the required health and safety standards. Next is inspection certificate, a document issued by an authorized inspection agency certifying the quality, quantity, or condition of the goods. Next is certificate of analysis. If applicable, this document provides detailed information about the composition, quality, and testing of the goods. Now next, what is certificate of conformity? A document certifying that the goods meet specific technical, safety, or quality standard. Next is non-negotiable seaway bill, an alternative to a bill of lading that serves as a receipt for the goods, but it is not a title document. It is often used when buyer wants the goods to be released without presenting an original BL. Draft or bill of exchange, a written order from beneficiary to the buyer requesting payment for the goods. It specifies amount, due date, and instruction for payment. Please remember here, this draft or beneficiary is a legal document, and in some countries it is In some countries, you need to pay stamp duty against draft or bill of exchange. In next slide, we will discuss about benefits of using letter of credit. Letter of credit offer valuable advantages in international trade. For sellers, LCs ensure payment security and mitigate credit risk by guaranteeing prompt payment upon document compliance. Buyers benefit from receiving goods as specified and adhering to import regulations. LCs enable streamlined trade procedures and provide a standardized framework for resolving disputes. Both parties enjoy enhanced credibility, reduced uncertainties, and the ability to negotiate favorable trade terms. Now, it is very essential to know about future developments on digitization of letter of credit. The future of LCs lies in a digitization and technology integration. Blockchain, smart contracts, and electronic documentations are transforming LC processes, enhancing security, speed, and transparency. These innovations minimizes paperwork, reduces errors, and enable real-time tracking. Automated validation and instant document sharing streamline processes, paving the way for faster, more accessible, and adaptable LC transactions in a rapidly evolving global trade environment. Well, that's all about letter of credit for today. Thank you for watching. Don't forget to like, subscribe, and hit the notification bell to stay updated with our future videos. Until next time, take care and happy banking.